This is the second exercise about statements of comprehensive income, and this is for the ABC Brick Company. Now, the first thing you were asked was to fill in the blanks. So, before we start filling those in, let's have a look. First of all, sales revenue, the money coming in, minus the cost of sales, the money you spent making the items, equals gross profit. Then gross profit minus all your other expenses equals net profit. So if we have a look at this one here, it is 196 minus 100 equals gross profit. It is there, it is 96. If we look at the second one, it's 193 minus 119, it is 74. And then if we look at the third one, it is 316 minus 175, it is 141. Now this one is a little bit trickier because we've given our sales revenue, we're given our gross profit, we need to work out our cost of sales. So sales revenue minus cost of sales equals gross profit. So 196 minus X equals 90. So if we take 90 from 196, it will give us our cost of sales, which is 106. Okay, we're now looking at the bottom. We're looking now at gross profit minus expenses equals net profit. So our gross profit was 96. We have all our expenses here. If we take them off from our gross profit, we will have our net profit of 10. If we go here, we're doing exactly the same. We've got 141 for our gross profit. We take off all our expenses. We have 28. Starts to get a bit trickier because we've got our gross profit here. We have almost all our expenses and we have the net profit. So it's exactly the same. We take our gross profit, we take off the numbers we have, and the answer will be what is left over. So this answer is 26. And the final one here, which is our expenses for equipment, just the same process, and the answer is 16. We're now going to have a look at the second question, which is what has happened to sales, costs, and net profit. So first of all, we're going to look at sales. Now we can see that sales has remained fairly steady until 2018, where it had about 120,000 increase. That is a lot of money. Ooh, not doubled, but about 60%. What could have caused that? That could have been caused by extra advertising. It could have caused by opening another shop. It could have been caused by having a really good sale, getting a new contract. Lots of different causes, but an increase in sales for that we would assume is very good. The second thing we look at is the costs. First of all, we're going to look at the cost of sales. Now, cost of sales went up in 2018, but that is because they're selling more. Remember, cost of sales relates to how much you have sold. So that's not a bad thing, it's a good thing. The only bad thing we have here is that in 2016, the cost of sales went up where the sales revenue went down. That could be a problem. It could mean that there was a price increase, a temporary price increase of some of our goods. So that's what you need to look for when you're looking at your cost of sales. We're then going to look at our overall expenses. We've got our directors' wages, which stayed exactly the same, but then rose in the last year. Perhaps they got a bonus because more was sold. We've got bills, which have stayed fairly steady. The equipment again went down and then went up and up. The motor expenses went up in 2018, but perhaps the directors got new cars. And the other's quite worrying for this business, mainly because the majority of their expenses are not labelled. So do you know what I mean? If I ran this business, I would want these written out separately so I knew what they were. And finally, we're going to look at net profit. Net profit is the profit at the end of the day. And we have a fairly standard 10,000, 11,000, 11,000, and suddenly £28,000. It more than doubles. So this is a really good thing for this business. Look, the sales have not doubled, but they have increased, but the profit has more than doubled. The business is doing much better in 2018. And this brings us to the final question, which is their best year? And the answer really is, it does depend. Sales have gone up, cost of sales have gone up, gross profit's gone up, net profit's gone up. That looks like a fabulous year for us, doesn't it? The directors would also be happy because their business, their wages have gone up, so they would be really, really happy. The staff might not be so happy though. They might be working extra hard and there's no mention of their pay here. Perhaps it's in the other, but if that hasn't gone up, they may not think it's their best year. So it's good to think about different points of view when we're assessing which is best.